So what are we looking for from tomorrow for Bank of England? Well, again, market's pretty much firmly pricing in 25 basis point rate cut to 0.25. Now that would be the first rate cut since 2009, as you can see here in the small chart. I hope you can see it. It's that basically the Bank of England has kept the same headline monetary policy for the past 6-7 years. And no move on rates in that time. Now, question of quantitative easing is the issue. What would the Bank of England do in terms of quantitative easing? Well, the market tomorrow, according to Reuters, if I get the expectations, here we go. Market tomorrow is this, first of all, on the voting makeup, one leaving unchanged. Now that would be interesting. That's likely, I'd imagine, that the Reuters are thinking that's going to be in McCafferty. And then 8 voting for a rate cut. Now the 8 is fairly significant because one of the reasons why the market started thinking that there was going to be pretty much a nailed-on rate cut was the views of Martin Wheel. Martin Wheel has been a hawk on the Bank of England Monetary Policy Committee for a long while. He's periodically votes for a rate hike. Obviously, never got the rate hike, but still, periodically he's been voting for rate hikes. Now, this would be significant because this is going to be Martin Wheel's last vote on the MPC before he gets rotated out, and he obviously is a hawk, and if he votes for a cut, now that is significant, being his swan song as well. I mean, I can't imagine he'll be, unless he was desperate, unless he was really had to, you would be questioning whether a long-time hawk on the Monetary Policy Committee using his last vote to vote for a rate cut. That's a big legacy, isn't it, for him personally? So it would be a fairly significant event, I think, and fairly indicative of the market needing to see a rate, or the UK needing to see a rate cut. In terms of quantitative easing, it appears on Reuters that they're not forecast to extend quantitative easing. Now, I had read that someone in the market have been looking for quantitative easing. Now, figures of 100 billion sterling have been suggested, but I think they're not going to talk. I don't think they're going to do quantitative easing tomorrow. I think they'll do the rate cut. I think they'll talk about doing quantitative easing, and they'll also talk about a program of rate cuts. In my opinion, I think they'll use particularly dovish language. And I think that will prevent sterling from rising. Sterling has been rising, interestingly enough, even in the face of what seems to be an almost nailed-on rate cut. I think the market has sort of fairly much come to the conclusion that there will be a rate cut. But I think it depends on the language in terms of the rhetoric, whether there'll be a significant selling pressure through sterling. Now, I think sterling's going to sell off, yes, on the back of this monetary policy decision. I think if the MPC is particularly dovish, cutting growth targets, maybe increasing inflation, I suppose, yeah, but certainly cutting growth targets would be the important one. Saying that is not going to be the last rate cut. Potential discussion of quantitative easing program further down the line, maybe next time out. Maybe they'll do an increase in quantitative easing, maybe 100 billion. But I think it will be the dovish language that sets sterling lower, if that were to be seen. So at the moment, we've got sterling, which has actually rallied today, but don't necessarily think that it's going to last. I think the rate cut from the Bank of England will be fairly decisive. Now, in terms of how the markets would react to this, now. It depends on how dovish the Bank of England is, but I think sterling will sell off, and I think that ultimately means it's going to retest the post-Brexit lows. 127.96 was the low on cable. post-Brexit in the immediate aftermath of Brexit, 127.96. I think that would be tested. 86.25, the high on euro sterling. I think that would be tested. And again, I reiterate, 129 on sterling yen, I think would be also seen. Generally, across the forex majors, you're likely to also see the dollar and the yen outperforming, because it'll have an interesting legacy on the others, and I'll talk about that just down below. First of all, on equities, sterling weakness and looser monetary policy for the FTSE 100 would be bullish for FTSE, I think, because as you saw in the post-Brexit moves, FTSE found support and was quite strong on the fact that it's on the weaker sterling, and the reason being because it's about sort of 70% or so of FTSE earnings are generated abroad, and also you've got the big dollar paying dividend stocks such as BP, Shell, and those dollar dividends would be translated better into sterling on a weaker sterling. So you subsequently get FTSE 100 benefiting on the back of that. Now, expectation of loose monetary policy across the markets would also help to support DAX and CAC too. Now, in terms of gold, I think gold would also be supportive, because I think, again, it could potentially be that the Bank of England begins another wave of loose monetary policy across central banks, and that ultimately is supportive for gold. Legacy of the move, Bank of England could begin a program. Yes, it could, as is just discussed, and also other central banks could follow suit. The ECB would be the prime candidate here. I think Mario Draghi was sort of fairly wait and see in terms of Brexit. And to be honest, the data out of the Eurozone has not been all that bad in terms of the PMIs today. They're marginally okay, marginally better than expected. But it'd be interesting to see what Draghi does in the wake of a Bank of England rate cut, because obviously that should theoretically strengthen euro sterling. So yeah, it'll be very interesting to see if the ECB then follows suit. Other banks could also act. People's Bank of China, interestingly enough, did a little bit of a cheeky easing around the Brexit time. It could be following suit again because of the dollar strength. You'd also see possibly the RBNZ, possibly the SNB. I mean, these are all possibles following suit as well.